What if your divorce left behind more than emotional baggage? What if it also left a trail of bills, tax traps, and legal surprises, just waiting to explode when you least expect it? For thousands of people, that's not a hypothetical. It's real. You think the papers are signed, the accounts are split, and you're finally free to move on. But then one day you get a letter, a collection notice, an IRS audit, a bank statement showing a charge you never made. And that's when the panic sets in. Here's the truth no one tells you during divorce. Just because the marriage ends, doesn't mean the financial fallout does. Your ex might walk away with more than they're entitled to, and you might be stuck with debt, taxes, or penalties you didn't see coming. And the worst part? Even if your divorce agreement says they're responsible, that doesn't always mean the law agrees. In this video, we're going to uncover the hidden financial risks that follow people long after a divorce is finalized, and what you can do right now to protect yourself before it's too late. These aren't random what-ifs. These are real traps people fall into every day, because they didn't know the rules, didn't ask the right questions, or didn't realize how much was still tied to their ex. We'll walk through 7 financial mistakes divorced people often don't see coming, until the damage is already done. From tax liabilities that sneak back years later, to surprise bills from joint accounts you thought were closed, to legal tools that can protect you, but only if you act fast. So if you think your divorce is behind you, or if you're in the middle of one right now, don't click away. Because this might be the only warning you get before the bills arrive. And the steps you take today could save your future self from a mountain of regret. Let's get into it. Most people think that once the divorce is finalized and the judge bangs the gavel, their financial ties to their ex are over. But here's the harsh truth. Creditors don't care what your divorce decree says. If you and your ex had a joint credit card, a co-signed loan, or even a shared mortgage, you're both legally on the hook for it, no matter what your settlement says. That means if your ex stops paying, racks up charges, or defaults completely, the creditors can, and often do, come after you for the full balance. Take a second to think about that. You could be going about your life, paying your own bills, thinking everything is handled, and suddenly get hit with a collections notice for a card you haven't touched in years. And when you call the credit company and explain, "Oh, that was part of the divorce," they'll say the same thing every time. "That's between you and your ex. We just want our money." This happens more often than people realize. One missed payment from an ex can tank your credit score, trigger late fees, and put your financial future at risk, without warning. Even if you took your name off the account in your mind, if the lender still sees you as a co-borrower, you're just as responsible. The smartest move? Don't wait. As soon as divorce becomes a possibility, start separating your finances. Cancel joint credit cards. Refinance loans and mortgages under one name only. If your ex can't qualify a loan, you need to negotiate other solutions. Not leave your name on debt you no longer control. And don't just take their word for it. You need written proof from the bank or lender that your name has been officially removed. Without that, you're still legally bound, no matter what the divorce paperwork says. But it isn't just credit card bills and loans that can catch you off guard. Because the next surprise, the one that shows up around tax season, can be even more expensive. If you think joint debt is dangerous, just wait until the IRS gets involved. Because taxes after divorce? That's where a lot of people get blindsided, and by then, the damage is already done. Here's the first thing to understand. If you filed joint tax returns while you were married, the IRS can hold you responsible for anything that goes wrong on those returns. Even if it was your ex who made the mistake. Even if you had no idea they underreported income, claimed fake deductions, or forgot to report side earnings. If your name was on the return, the government considers you just as responsible. And the penalties? They're no joke. Interest, audits, wage garnishments, and even liens on your assets. All because of something your ex did, or didn't do. But that's not the only trap. After a divorce, many people don't update their filing status in time. They keep filing as married out of habit, or they mark the wrong box without realizing it. And when the IRS catches it, that's a red flag. Refunds get delayed. Notices start showing up. And once they start digging, they rarely stop at 1 year. There's also the name mismatch issue. If you changed your name after divorce but didn't update it with the Social Security Administration, your tax return could be rejected entirely. And if it gets flagged, your refund may vanish until the issue is fixed, which can take months. And let's not forget alimony. Before 2019, alimony payments were tax-deductible for the payer and taxable for the recipient. But that rule changed. Now, alimony is no longer deductible or taxable. But not everyone knows that. Especially if your divorce agreement was based on old rules. That one mistake could lead to incorrect filings and again, a painful IRS bill you weren't expecting. Bottom line, just because you're divorced doesn't mean you're off the hook. The IRS doesn't take your ex's word for it. They follow paperwork. They follow signatures. And if your name is there, you're part of the problem. Even if you weren't part of the decision. But if you think tax issues are frustrating, just wait until you find out what your ex might be hiding from you entirely. And what you can do to uncover it. One of the most unsettling parts of any divorce isn't the arguments, or even the emotional fallout. It's the sinking feeling that someone might be hiding something. And sadly, in far too many cases they are. When couples split, it's not uncommon for one spouse to quietly move money, open new accounts, or fail to disclose assets. It's subtle. A few missing statements here, a credit card you never knew about there. Maybe a business expense that's really a transfer to a private account. Or a cryptocurrency wallet tucked away under a different name. The result? You walk away thinking you got your fair share, when in reality, you only got what they let you see. And it's not just about money coming in. Sometimes the hidden danger is debt. Private loans, old tax obligations, or past due credit cards that never came up in the settlement, until a collection notice arrives at your door. What most people don't realize is this. Your financial picture during divorce is only as clear as the information you demand. If you don't insist on full financial disclosure, every account, every asset, every liability, you could be walking straight into a trap. Because once the agreement is signed, it's a lot harder to go back and fix what was left out. That's why it's often worth hiring a forensic accountant. Especially if you suspect anything is off. They can analyze bank records, credit card statements, business ledgers, and look for inconsistencies. If your ex is hiding money, shifting funds, or underreporting income, these professionals are trained to find it. You don't have to be paranoid. But you do have to be smart. Trust is nice. Proof is better. Even if you think your ex is being honest, confirm everything. Get statements. Compare numbers. Ask questions. And if they push back on transparency, that's a red flag, not a coincidence. Because in divorce, what you don't know can absolutely hurt you. And even if you're trying to take the high road, that doesn't mean your ex is too. But even when everything's disclosed, there's one final mistake that catches people off guard. Believing that what your divorce agreement says is legally bulletproof. This might be the most shocking realization of all. Your divorce settlement doesn't protect you from the IRS. You could have a court order that clearly states your ex is responsible for a specific tax bill, a shared debt, or a financial obligation. You might even have it in writing, signed by a judge. But if your name is still on a past joint tax return, the IRS doesn't care what the divorce decree says. They will come after both of you. And if they can't collect from your ex, they'll come after you. It sounds unfair. And honestly, it is. But legally, a divorce agreement is a civil document. The IRS follows federal law, and federal law says that if you signed a joint return, you're jointly and severally liable. That means they can go after either of you for the entire debt, regardless of who was supposed to pay it. And here's where it gets even worse. If your ex underreported income, falsely claimed deductions, or didn't report earnings at all, and you signed the return, you're still on the hook. Even if you didn't know. Even if you weren't involved. This is where most people feel blindsided. They think the judge's decision protects them. They think their attorney made everything airtight. But in the eyes of the IRS, the only thing that matters is the tax code. And that doesn't care who cheated on who made the money, or what promises were made during mediation. So what can you do? If you're already being chased for a debt that should have been your ex's, you might qualify for something called innocent spouse relief or separation of liability relief. These programs can legally separate your tax responsibility from your ex's, but only under specific conditions, and only if you apply in time. Most people never even hear about this option. They just start making payments, assuming they have no other choice. But the truth is, there are protections available, if you know to ask. And if the IRS has already contacted you, the clock is ticking. These programs have strict deadlines. Waiting too long could make you permanently liable for a mistake you didn't even make. But don't panic, because in the next section, we'll break down exactly how these relief programs work and how you can use them to stop the bleeding before it's too late. So what happens if the IRS is already knocking? Maybe you got a letter, or maybe your refund disappeared without warning. The good news is, you're not powerless. But you have to know which protection applies, and how to act fast. Let's start with innocent spouse relief. This is designed for people who signed a joint return, but didn't know their spouse had lied, hidden income, or made false claims. Maybe they were running a side business and didn't report it. Maybe they claimed deductions that weren't real. If you had no idea, and the IRS is now holding you responsible, you can request to be released from that debt. But there's a catch. It's not automatic. You have to apply. And there's a time limit. You must request relief within 2 years of the IRS taking collection action. If you miss that window, even if you qualify, you're stuck. That's why so many people fall through the cracks. They don't know the rule exists until it's too late. Then there's separation of liability relief, which lets you split the debt with your ex if you're divorced, legally separated, or haven't lived together for at least 12 months. This doesn't erase the debt, but it prevents you from being forced to pay for your ex's portion. It's especially helpful if you want a clean financial break, but didn't get one the first time. And then there's injured spouse relief, which is completely different. This isn't about mistakes on the return. It's about what happens to your refund. Let's say you filed jointly, but your ex had unpaid child support or back taxes. The IRS might take your entire refund to cover their debt. Injured spouse relief lets you recover your portion of the refund, so you're not punished for their financial baggage. All 3 programs are underused. Why? Because most people don't know they exist. The IRS doesn't advertise them. Divorce attorneys don't always bring them up. And unless you go searching for answers, you might never find out until it's too late. But if you're watching this, now you know. These aren't loopholes. They're legal protections built for people exactly like you, who tried to do the right thing and got caught in the crossfire of someone else's bad decisions. Still, even with the IRS off your back, your financial picture isn't complete. Because there's one more piece of the puzzle that can create huge problems: your retirement plans and your beneficiaries. And if you forget to update those, the fallout can last for decades. You've done the hard part. You survived the divorce. You untangled your debts. Maybe you even handled the IRS. But what most people forget to do, what causes the biggest financial mistakes down the line, is update their financial documents. And the most overlooked one? Your retirement accounts. If you had a 401k, pension, or IRA during the marriage, those assets may have been divided through a qualified domestic relations order, or QDRO. This is a court-approved document that allows you to legally split retirement accounts without triggering massive tax penalties. But here's the problem. If the QDRO isn't properly filed, executed, and sent to the retirement plan administrator, you could lose access to the money you're entitled to. We've seen cases where someone thought they had rights to half a pension, only to discover years later the QDRO was never finalized. And now, their ex is retired and collecting 100% of it. And there's nothing they can do. But even beyond QDROs, there's another critical mistake: not updating your beneficiaries. Your life insurance, retirement accounts, and even bank accounts may have payable on death instructions from years ago. And if your ex is still listed, they could inherit your money even if your will says otherwise. That's right. Beneficiary designations override wills. So unless you go in and change them, the person you divorced could legally receive your assets after you die, while your children or new partner get left out. It's one of the most painful estate planning mistakes, and it happens all the time. And it doesn't stop there. You also need to update your will, power of attorney, healthcare directive, and any joint financial accounts. If your ex still has access to an account for emergencies, that account needs to be closed or moved. If your mortgage is still in both names, it needs to be refinanced or sold. Leaving things as is might feel easier, but that comfort now can cost you everything later. This is where working with a financial planner or estate attorney can be worth every penny. Because once you've done the emotional work of moving on, you deserve to know your financial life is secure, clean, and protected. But there's one final step, the most important one. And it's something most people don't do until it's too late. After everything you've been through, untangling shared debt, dodging tax traps, correcting old paperwork, there's one more move that separates people who stay protected from those who end up right back in financial chaos. And that's this: you need a team. Too many people try to go it alone after a divorce. They think, I've already paid the lawyers, I can handle the rest myself. And while it's tempting to close the book and move on, that's exactly when small oversights turn into big disasters. Because here's the truth: life after divorce doesn't just need cleanup. It needs a plan. And unless you're a financial planner, tax expert, and estate attorney rolled into one, it's easy to miss the fine print that can cost you later. This is where bringing in the right professionals can change everything. A family law attorney can make sure your QDRO is filed properly, your divorce decree is enforceable, and your rights are protected long after the ink dries. A financial planner can help you rebuild a strategy from scratch, one that matches your new income, your new goals, and your new future. They'll spot gaps, optimize your accounts, and help you make decisions that aren't just safe, but smart. A forensic accountant can be your secret weapon if you suspect something was hidden, misreported, or never fully disclosed. They don't just crunch numbers, they dig for the truth. And a tax professional can help you stay in good standing with the IRS, reclaim money that was wrongly taken, and keep you out of hot water when new laws or old mistakes come back to haunt you. This isn't about spending money you don't have. It's about protecting the money you do have, and the future you've fought hard to build. Because what you overlook today could become a crisis tomorrow. And no one needs that after the emotional toll of a divorce. So before you close the book and try to forget the paperwork, ask yourself: have I future-proofed my finances? Or have I just put a lid on a mess that might boil over later? Because peace of mind isn't just about moving on, it's about knowing nothing's lurking behind you. Now let's wrap this up with a few final thoughts, and what to do next if you want to stay protected for good. Looking back, most people don't regret the divorce itself, they regret what they didn't see coming afterward. The missed deadlines, the hidden bills, the tax letters that arrived out of nowhere, and the feeling that, somehow, they were still tied to a past they thought they'd escaped. The truth is, divorce ends the marriage, but it doesn't always end the consequences. And if you don't know where the traps are, you can step into them without warning. That's why this video matters. Because now you know where to look, and what to fix before it's too late. We've covered a lot: joint debts that keep you responsible long after the split, tax liabilities that the IRS won't forgive just because a judge did, hidden assets that never made it to the table, and the legal relief that could save you thousands if you act in time. You've seen how retirement plans, outdated documents, and forgotten beneficiaries can all work against you if you're not careful. And you've learned why having a trusted team isn't a luxury. It's a necessity. So ask yourself, where do I stand right now? What loose ends haven't been tied up? What steps have I delayed because they felt overwhelming or confusing? And then, take action. Because the decisions you make now won't just protect your wallet. They'll protect your peace of mind, your independence, and your future. This isn't about looking back in regret. It's about looking forward with clarity. If you found this video helpful, please leave a comment below and share one thing you're planning to do differently from now on. Your story might be the exact thing someone else needs to hear. And if you haven't already, make sure to subscribe and turn on the bell so you don't miss future videos. We're here to give you the information others often leave out. Thank you for being here with us today. Protect yourself, protect your future. And remember, what you don't fix now, you might pay for later. We'll see you in the next video.